Welcome to CNBC Africa's special broadcast of Nigeria's Monetary Policy Committee meeting. My name is Wole, Famurewa, and thank you very much for joining us. Of course, in a few minutes, we'll be crossing to Abuja, where Nigeria's Central Bank Governor Godwin Emefiele is standing by to read the considerations and decisions of the Monetary Policy Committee. Discussions about how the MPC will address the contraction of Nigeria's economy and the shortage of foreign exchange are among the big issues on the ground today. And before we cross to Abuja, just to give you some perspective on what some people that we've been speaking to are thinking about today's meeting. Take a look.
Most striking reality of the Nigerian economy today is the decline in GDP. The central bank has to respond to that.
The challenge for the monetary policy is to decide whether they want to focus on growth or whether they want to control inflation. Now that we're in a recession that is deep, my own take is that they should maintain the rates as they are.
The CBN has already taken some steps to address the key drivers of the inflation figures.
We need to see the impact of the new FX regime, for some months before they can begin to change policies.
They've come up with a new policy on the FX, and it is now to reassure investors that it is here to stay and they will continue to meet whatever liquidity needs the market needs.
At normal times, you will be expecting that the central bank provides liquidity support for the economy to be able to get out of the recession.
Well, the broad view is that driving growth trumps any concerns around inflation. Before we cross to Abuja to hear from the Central Bank Governor, joining me in the studio to preview the announcements are Bismarck Rewane, the CEO at Financial Derivatives, Bayo Adeyemo, Market Head and Country Treasurer at Citi Nigeria, and Abubakar Suleiman, Executive Director and CFO at Sterling Bank. Gentlemen, thank you so much for coming in. Very good to have you as always. Maybe we should start with you, Bismarck. What are we calling? Like I mentioned, many people that we spoke to are suggesting that the concerns around growth will be the most important factor that the MPC will be considering at this meeting. What do you expect?
Trade-off between growth and inflation, you pick growth when you're in a recession. No, it's a no-brainer. However, to give some fillip to the growth consideration, I think that they might actually reduce the CRR so that the liquidity constraint for lending can be kind of avoided or mitigated.
Right. Abubakar, your thoughts? He's talking about some easing to some extent. You work in the banking sector. You're feeling the pinch of the tightness that we're seeing in the system right now. Do you think that there is a need for the central bank to ease a little bit?
My view is that the government has done a lot to prepare the room for growth in the future. But that unless we do something to make capital available, and specifically debt capital, in the absence of any foreign investment, then that will not happen. We've seen many instances where great ideas that are ready to take off the ground have been suspended because lending is not happening right now.
Right. And so do you think that that case for easing makes sense at all?
There's a very strong case for easing, and I think it's one that I believe the MPC would have considered in their decision.
All right, Bayo, you obviously interact with foreign investors quite a bit, and before this MPC, we know that the Central Bank Governor and several others were on the roadshow trying to get some feedback from foreign investors. Over the last few weeks, we've seen the Central Bank tighten, we've seen rates move higher, but the foreign investors have still stayed on the sidelines. Do you think that what we've seen over the last few weeks could catalyze some investments, or do you think that the MPC needs to do something around that issue?
Well, yes, I think that the actions the central bank has taken already can catalyze investment. I think what's key now is to just sustain the tempo and the mode, and that's why I would think that at the worst case scenario, central bank would probably leave things as they are, but maybe might tinker with the asymmetric corridor to make their tightening a bit more effective.
Right. Let's assess the dollar shortage. Since the last meeting, of course, at the last meeting, we know the MPC recommended some more flexibility, and subsequently we did see the central bank initiate a move, and it has worked to some extent. What's your overall perspective on what the CBN has done with respect to the flexibility of the foreign exchange market, and what more do you think
the policy is beautiful?
It's spot on.
Right? But the management of it, market mechanics is failing in the sense that there has to be some consistency in the frequency and the volume of intervention, because you're an interbank player and you're a market leader. So it cannot be spasmodic. It cannot be as the spirit drives us. There has to be some consistency. That is where it's failing. The signals are as important as the policy in market perception, because you're talking about investors, markets, operators, manufacturers, and people who are even doubting the capacity to deliver on your forward contracts. Now they've delivered on the first forward contract, but there should be no doubts. When the central bank of a country speaks, it should be cast in stone. It's the gold standard. Now, so to eliminate those doubts, and I'm sure the Central Bank of Nigeria has the capacity to meet all these obligations, and they've done everything, but the signals have to be consistent, clear, and credible.
Right. But how do you read the fact that the central bank, you could say it's an unprecedented move, given the scarcity? Recently, we saw that they stayed out of the forex market for a couple of days. They have returned recently. Do you think that was a strategic move by the CBN? And what's your assessment of that move? Because since then, we have seen the Naira weaken quite a bit.
Well, I can't say for certain what the central bank was thinking. In those 3 days, they didn't intervene. But having said that, I think that on Friday, for instance, we witnessed the market where the other sources actually provided more dollars than the central bank. This was essentially because, I mean, the rates traded very freely, and we did see flows coming. I think the regime the central bank is running is such that they necessarily don't have to intervene on a daily basis. They should only come in when they are uncomfortable with the levels that the markets are trading at.
Right. Abubakar, your perspective on that?
Bayo is spot on. We should get to a point where the central bank is not seen as the only determinant of prices. We should get to a point where other players are also doing exactly what the central bank is doing, taking investment call based on the rates that they see in the market. My point is that they have taken the right decision. It's going to take time for us to get the kind of result we want. It is important that we don't waver.
Right. And I think there's also, if you like, the temptation to overreact here with respect to the contraction in growth. So whatever action we see from the MPC, it can only go so far, because many will suggest that it's really the fiscal authorities that can stimulate growth. And I just want you to speak to this point, because we know in the past, the MPC used to speak quite a bit in the notes, in the communique, to the government with respect to what they would like to see them do to help spur growth, to reduce inflation and so forth. I think that message is very important at this time. What are your thoughts?
You also understand that at the time the central bank was assuming fiscal responsibilities in addition to monetary responsibility, there was no cabinet, there was no minister. So the central bank became the economic spokesman of the country. Now that those functions have been delineated, it is quite clear that the central bank is focusing on monetary policy, which is to create monetary stability at a time of growth and complement fiscal policy. So the fiscal direction is clear. The medium-term economic framework has been announced. Right. The budget, basically, we are seeing most of the naira, excess naira flowing back into the fiscal space. The state FAC has gone up all the way to 559 billion naira from 305. Like Abubakar said, there's time between policy and impact, and you have to stay the course. But at the same time, because the market is still premature, and it's not as sophisticated as it is. That is why periodic interventions as a market leader to show direction is important. The ideal situation is that you stay around and allow the price determine that. But we are looking for a shift in the aggregate supply of dollars, not just an increase in the quantity of dollars. And that comes because confidence has been restored. Confidence will be restored because of your constant participation to show leadership that you believe in what you're doing.
Right. But are you suggesting that it's really the MPC that has the responsibility to drive those dollar flows? Because I'd like to get your perspective on this as well, Abubakar. Some people that I have spoken to, in fact, in the build-up to this MPC meeting, are suggesting that the fiscal authorities can do more to supply dollars. One example is perhaps sell some of their assets, maybe equity in some of the investments like the LNG or the NMPC or whatever, and just get those flows back, because it is a critical problem. Dollars remain very short several weeks after this new policy was formed. I'd like both of you to speak to that point. Maybe you can go
Look, the
first.
aggregate supply curve of dollars are things that do not happen in the short run. So let's not expect, even if you have to sell your LNG things, to take some time. It can help, but it can also send a signal that you are broke or you are, it's a strategic thing, but the monetary policy is tactical. So for now, all you have to do is to ensure that you get confidence. Once there's confidence, money's on the sideline will begin to come in. And don't create a crisis of false expectations. It will take time. The time between when, this is only 40 days after we launch this plan, we're expecting the world to change. It's not going to change. It takes time. And gradually, the spread between the parallel market and the spot market has dropped to as much as 20% from 80% before, before June.
And that's very significant.
And that is significant. It's a move in the right direction. We are being too hard on ourselves. And I'm saying that that's what it is. Policymakers need to be encouraged to continue and stay the course. I think that's what we should be looking at.
Abaka, your perspective?
I think we should be clear about Nigeria's net worth. Nigeria's net worth is not $30 billion. It's probably well in excess of $30 trillion, whatever the value is. The problem we have is that we've classified a lot of our capital asset in non-cash asset, and we're at a point where we need to show some cash. So you are right, we do need to restructure the net worth of Nigeria, put a lot more in cash and near cash so that we create the confidence in question. So asset needs to be restructured. The other point I need to make is to go back to monetary policy. To understand where we are in monetary policy and why I think we are out of wrong way is to look at all of the decisions in the past, starting from the CRR, moving on to the TSA, then moving on to the withdrawals as a result of the exchange rate issues when the investors in the fixed income left. Then you move on to the credit lines that have now been withdrawn from the country. Then you move on to a reduction in actual government revenue, which is the FAC allocation. By the time you look at all of these aspect of tightening, you need to ask yourself that, could we, like you say, be swinging too far in one direction? And what would be the consequences? What you don't want to see is what we saw in 2009, where we had interest rate in double digit, and then overnight we had to crash to 1 or 2% in an attempt to correct the process of prolonged tightening. And I think we may be facing that now.
Interesting point. Okay, before we go to Abuja, just to get your perspective on this story, like I mentioned, we did see the central bank governor go out there to the US, Europe, to talk to foreign investors. And I just want to get your perspective on the quantum of flows that can actually come as a result of those trips, because the world has changed. We've had Brexit since then, and the global economy growth remains relatively slow, and that impacts capital flows. Your perspective on how much we can bring back as a result of some of those trips?
Well, yeah, I think significant flows can be brought back on the back of the central bank's trip. I mean, the global environment, Brexit, like you said, is actually supportive of extreme low interest rates. And there are already talks of negative interest rates in some of those climes, which suggests that, I mean, they will be looking for countries where they can invest and sort of get higher yields. I think the critical thing is just restoring the confidence of the investors. This is a market that hadn't traded for 16 odd months, and the central bank has done the right things in the past 1.5 months, and they just need to stay the course. I mean, you can't reverse these things overnight.
All right, but unfortunately, we have to leave it there. Let's now cross to Abuja.